There are 64 technologies that will determine the world's destiny, and China currently controls 90% of them. However, it was not always like this. In reality, 20 years ago, the United States controlled 60 out of 64 technologies. Now, over the last decade, China has surpassed the United States and firmly controls the future of our globe. 10 years ago, Harvard Business Review issued a research article saying that China is incapable of innovation. But fast forward a decade, China today produces 5 times more high-impact research than the United States. Just look at DeepSeek. Following its shocking release in January 2025, Nvidia's shares fell by almost $600 billion in value, the greatest single-day decrease in US stock market history. The reason for these unexpected losses on the US stock market is because leading AI models in the West are thought to require approximately 16,000 Nvidia-produced chips, but DeepSeek trained its R1 model with only 2,048. In 2024, OpenAI spent $5 billion developing its ChatGPT AI model, whereas DeepSeek spent only $5.6 million on R1. This is shocking to the American dominance in technology because DeepSeek is a lighter model with lower energy usage. It's highly affected US stock prices, which fell by 7 to 28%. Furthermore, DeepSeek models, which have a semi-open source software structure, astounded everyone by surpassing many existing AI models in problem-solving, coding, and math-related activities during comparative testing. And today, China's economy has risen to become the world's second-largest economic power. As a result of this rise, many of its enterprises, including Tencent, Alibaba, and Huawei, have grown to become some of the world's largest businesses. Every day, millions of individuals use their products, ranging from online games and shopping to mobile phones, and the number will soon reach billions. But the rise of all of these went mostly unnoticed. People understand that they rely largely on Chinese-made products, but they are ignorant that the technology, the software, the new apps, from TikTok to Temu, all of them are owned by China. For example, Lazada is one of Southeast Asia's leading e-commerce platforms. Lazada is primarily owned by Alibaba, one of China's largest enterprises. Volvo Cars is one of Europe's most well-known automobile brands, yet it is also owned by the Chinese business Geely. Then there's ByteDance, the firm that created TikTok, which has become a global craze. So how did these Chinese firms suddenly become some of the most well-known and widely utilized items in a few years? To understand this, we must first look back at the two powers strategies. China aims to be a worldwide technology leader in 2 major areas: artificial intelligence and renewable energy. In April 2023, China's solar power output exceeded 430 gigawatts, making it the world's largest generator of solar power. It is on course to more than triple Europe's solar and wind capacity by 2025. Furthermore, China intends to become the world leader in AI by 2030, with a $150 billion sector. But despite all of this hype, where does China's AI and renewable energy business stand today? Apollo Go operates in 10 Chinese cities, including Beijing. BYD has steadily expanded its fleet since its debut in 2022. China has a high economy of scale, and the applications for AI technology are numerous. China is predicted to have 12 billion autonomous vehicles in operation by 2040, more than doubling the number in the United States. BYD's robotaxi is an illustration of China's entire investment in AI. Since 2015, regulations, permits, and infrastructural support have increased China's autonomous vehicle industry as part of the country's effort to compete with the United States in AI advancement. China's success is attributed to its innovation ecosystem, which uniquely blends top-down government assistance with bottom-up impetus from Chinese entrepreneurs. This is mostly attributable to China's $823 billion trade surplus in 2023. This means that the country as a whole exports significantly more things than it imports, allowing it to invest the excess income in important businesses. The Chinese government selects major growth industries for the future and boosts them with favorable laws, regulations, and concentrated investment in science. In contrast, industrial growth in the United States is heavily influenced by shareholder value and short-term gains. Firms in the United States may perceive that some industries are the future, but they are considerably slower to invest in them because they are more focused on making profits in the short term and less ready to spend in the long term. The US government also plays significantly less of a role. When the US government decides to engage in certain industries, the amount invested is always subject to change due to political parties and financial constraints. In practically the exact opposite position as China, the US trade deficit in 2023 was $773 billion, indicating that the US imports significantly more than it exports. As a result, any government funding must be obtained by printing money from the Federal Reserve, contributing to the US national debt of more than $30 trillion and moving the globe closer to dollarization. China's approach to innovation, known as the whole of nation, allows it to harness nearly infinite state resources. From 1995 to 2021, China's overall R&D expenditure jumped from $18.2 billion to $620.1 billion, a 3,299% rise compared to America's 277%. In recent years, US profits and government stimulus have frequently gone towards stock buybacks and executive pay. US companies have become greedy and complacent, with R&D becoming an afterthought. Meanwhile, China has emerged as a key global hub for advanced scientific research. Chinese scientists now lead the globe in the production of high-impact papers and contributions to well-known scientific publications that have undergone rigorous peer review. No place better exemplifies China's technological supremacy than clean tech. China already has more than 80% of global production capacity in 11 critical clean energy technologies, and it dominates the rare earth supply chain, accounting for 70% of global rare earth ore extraction and 90% of rare earth ore processing. It makes little sense for Western corporations to compete in the solar market. China's investment in large-scale solar panel production over the last 2 decades reduced prices by 85% between 2010 and 2020, resulting in exponential global development and major environmental advantages. After China's economy opened up in the 1970s, numerous Western corporations went in to take advantage of the vast market and low labor costs. In exchange for market access, Chinese companies benefited from decades of Western investment in conventional industries, such as automobiles and chemicals. The perception that China steals innovations stems from its willingness to trade expertise for markets. Ironically, the West is now inviting Chinese companies to visit their countries and offer their expertise in crucial technology such as clean energy. INA Energy, one of the leading US renewable energy companies, has grabbed the opportunity to gain from China's investment in solar. This year, the business opened America's largest solar factory in a 51-49 cooperation with LONGi, a leading Chinese solar company. As part of the agreement, INA Energy purchased LONGi's sophisticated solar technology, and the Ohio factory is planned to eventually manufacture 5 gigawatts of solar panels per year, creating over 1,000 new American jobs. If the United States wants to remain dedicated to meeting its climate change goals, it must cooperate with Chinese enterprises. Ford is another American corporation that has acknowledged that Chinese technology is critical to its green goals. Ford has recently established a collaborative venture with CATL, China's leading EV battery maker. Ford is investing $3.5 billion in a new EV battery facility in Michigan. The factory will employ licensed CATL technology to make lithium-ion batteries for Ford's F-150 Lightning trucks and other EVs. For all the discussion about China being the world's top polluter, the country is clearly the largest single player in the green energy transition, not just in China, but globally. Without China, achieving carbon neutrality would be impossible. Investing in the Global South. Historically, Western countries have focused their products on exporting to other high-income countries, but often overlooking little developing countries throughout the world. But China understands what it is like to be a poor developing country, and it sees these smaller countries as its greatest opportunity. After all, the Global South is home to 6.8 billion people, accounting for more than 85% of the world's population. As these populations rise, so will their demand for goods and new technologies. China's Belt and Road Initiative, or BRI, has created ports, railroads, and airports to help the Global South meet rising demand for goods. China's Belt and Road Initiative has spent more than $1 trillion in over 150 nations around the world, and predictably, these programs not only improve trade, but also make China a far more attractive partner than the West. Chinese smartphone manufacturers control 76% of the smartphone market in India and more than 60% of the African market. Huawei alone supplies 70% of Africa's 4G network. Chinese EV consumption is rapidly increasing in the Global South. In Latin America, Chinese businesses account for 86% of the EV market and 40% of overall car sales. So, what would the Global South be like without China today? Basically, there would have been no changes. Western-funded infrastructure investments in these nations are essentially non-existent, delaying the rise and development of these rising economies by decades. And to talk about telecommunications, Huawei has connected literally the whole Global South. The corporation began as a telecommunication equipment maker in the 1980s and has since evolved to become one of the world's largest and most prominent technology companies. Its goods and services are available in over 170 countries, and it's a key player in the worldwide telecommunications business. Huawei dominates one crucial industry: 5G. The company is a 5G infrastructure pioneer, laying the groundwork for the next generation of high-speed mobile internet in numerous nations. This is especially true in developing countries, where Huawei's lower-cost alternatives have attracted governments trying to update their telecommunications networks. Despite Western governments' fears about the risk of espionage or data breaches as a result of Huawei's ties to the Chinese government, the business has continued to grow its global influence. Countries in Africa, Asia, and Latin America have increasingly relied on Huawei to build their telecommunications infrastructure, allowing China to gain access to many countries' crucial communications networks. This creates a reliance, making it harder for governments to break free from Huawei's technologies, particularly as 5G networks grow more prevalent. The stealthy nature of Huawei's control stems from the fact that while most consumers are unaware of the infrastructure supporting their mobile and internet services, a large percentage of it is powered by Huawei technology. This provides Huawei vast control over global communications, all without the typical person recognizing the extent of its power. Another important industry is cloud computing. Most people identify cloud computing with firms such as Amazon Web Services and Microsoft Azure. However, Chinese internet giants Alibaba and Tencent have emerged as major participants in this arena, controlling a sizable portion of the worldwide cloud infrastructure. Alibaba's cloud computing branch, Aliyun, is currently the world's fourth largest cloud provider, with increasing market share in Asia, Europe, and the Middle East. The company's cloud services enable a wide range of applications, including e-commerce, gaming, finance, and artificial intelligence. Companies in Southeast Asia, India, and Europe use Alibaba's cloud services for data storage, software applications, and AI-powered analytics. Once again, without China, smaller countries throughout the world would not have the opportunity to engage and compete in the global economy that now defines our world. According to a security expert, AI is currently being employed extensively in warfare. President Donald Trump then met at the White House with representatives from OpenAI, Oracle, and SoftBank to explore a $500 billion investment in a new AI project known as Stargate. And if you spend $500 billion today, you will most likely lose 90% or $450 billion of your investment within 5 years. Now the question is whether the huge platform businesses will be able to recover this massive loss through income from consumers who will prefer cheaper and cheaper AI. Many investors have begun to worry that this business will have large profit margins, but no one knows for sure. Given the shock DeepSeek created in the US stock market and in Washington, The battle between China and the United States in the field of artificial intelligence appears to be intensifying. Today, the only AI that functions well is the one in the virtual world behind the screen. However, no AI-powered robot can perform the tasks of a plumber or a nanny. Why? Because the real world, the physical world, is significantly more difficult than the fictitious one behind the screen. The next significant step will be natural AI for real robots in the real environment.